Bitcoin falls to 75K but reclaims 77K and is actually holding support above 76K at the moment. Can we still rally up, or is this the beginning of a bigger breakdown below 70K? In today's episode, we're going to do a top-down analysis starting from the 3-month chart so we can really see what levels Bitcoin can hit. Welcome back to FlexCandle, where we read the candles and flex the moves. Right now it's about 8 p.m. Eastern time and the price of Bitcoin is currently at 76,675. We'll start off here with the 3-month chart. Now this candle closes in a month and 7 days, but what I wanted to see here is the Stochastic RSI. As you can see, we were toppy here and we're starting to roll over, and if we go all the way down to the bottom, this could be coming down for a while. We are still above the 21 moving average, which is at 56,286, but in the bigger scheme of things, we still see that there could be more potential downside and the bear market might not be over just yet. We take a look at the 2-month chart. This candle also closes in a month and 7 days. Here the stochastics are getting lower, but as you can see, we still got to round out a little bit more. Now we're above the 21 moving average as well, so that is still currently bullish, but we have to still think that with the summer coming, sometimes things stall a little bit. There could still be some more potential downside eventually. The monthly chart closes in 8 days and we're above the 50 moving average, but look, we're below the 21 moving average, which is at 90,072. Now the stochastics have reset here, but look how long we drag over here for. The same thing could happen here. This could easily roll over and we could drag here for a while and wait for the 2-month and the 3-month to reset a little bit. Now currently the way it's closing, we would have to say that we're still bullish because we pretty much reclaimed this red candle here. We got a green candle, another green candle, but this was way more green. We were closer to this 21 moving average prior, and as you can see now we're getting a big wick down. This could still close red, so we're not out of the woodworks yet here with the monthly close. The 3-week chart also closes in 8 days, and if we close like this looks like tweezer tops, and you guys know if we get tweezer tops, look at this here, we usually fall down. We're not above the 21 moving average either. We're trying to stay above this 50 moving average at 76,330. If we lose this, we could drop down to this 80 moving average at 57,972. The stochastics here are low, but again, we could also roll over. We have to be careful with that. The 2-week chart, this closes in 24 hours basically, in a day, and I'm not liking, again, the red candle, tweezer tops. We're trying to hold above this 80 moving average, but we cannot get above this 50 moving average yet, which is at 88,882. Stochastics seem to have room to continue to go up, but if this closes red, this is a bearish sign here for me. On the weekly chart, we closed tweezer tops last time and now we have a red candle. Stochastics here look toppy, and we roll back up and try to make it towards this point of control here, or this 100 moving average at around 87, 88K. It's still possible. This could still turn green. I'm liking that we're holding above the 21 moving average, but if we lose this, we could fall down towards this 200 moving average, and that's currently at 61,372. And we also have to keep in mind that ultimately we're still in a head and shoulder pattern. Left shoulder, head, right shoulder. We did half of the measure move when we went and wicked off this 200 moving average, and now we're kind of coming back up to the midline. The midline is pretty much where we are now. So if we reject from here, the rest of the head and shoulder pattern could still play out. Look at this big gap here in the VRVP. This could drop us down to about 40K, so we have to be careful with that. Now if we take a look at the 5-day chart, we lost the 200 moving average here briefly, but we're starting to get a wick. This candle closes in 2 days. If we could get back above the 200 moving average, you could say we still are kind of bullish, but the stochastics look like they want to roll over. This is looking like a cup and handle play. This could, if it breaks out, take us back above 90K, to be honest. Let's see what ends up happening. This is kind of looking like a falling wedge. We have to hold this 200 moving average, and if not, we have to hold this 21 moving average. We lose this at 72,800. It looks like more downside as well. On the 2-day chart, the stochastics still have to reset here. It looks like we're covering back up, but this could drag here for a while. Look what happened here, how we went up and down before we ultimately went up, and we lost the 21 moving average. That's not too bullish here. Now if we could get back above the 21 and break above this resistance on the 100 moving average at 80,355, then we could start talking about getting up towards this 200 moving average at 95K. Now on the daily chart, we see that the stochastics reset, but look, it looks like we want to curve over and roll down again here. Now we got rejected off of this 200 moving average. We lost the 21 moving average, and then we lost this 50 moving average actually, and yesterday we were able to regain it. Now with the candle right now, and today we were able to reclaim it. We just closed this candle. Now we have a new red candle here that's forming. You know, we're basically still kind of hovering around this 50 moving average. So we could break above this 50 moving average. This could be bullish, but we need to get above this 21 and this 200. If If not, this is going to be major rejection here. We could still roll over easy. And what I'm not liking is that this is looking like it could turn into a head and shoulder pattern. Left shoulder, head, and we can't get above this 21 moving average. This is a right shoulder here. And then the measured move to this, look at this, could bring us down to about 67K. This will break below this bear flag here. So this is a possibility unless these stochastics start to turn up and we get up higher. Now, another thing that I'm seeing is, I was telling you guys when we got to this 200 moving average that this bear flag is still in play. Even though we broke above it, we can't sleep on this bear flag because we can actually break back into it. And look, we came all the way to the bottom channel of this bear flag here. So we're back in it. We could easily start breaking down, and this head and shoulder, like I showed you, could start the beginning of this bear flag breaking down. Now, one thing that's positive is that since we got to the bottom, we could come back to the top of this bear flag, and that'll be pretty much back at 80K. The stochastics are low enough that it can happen, but I'm not liking this curvature that we could roll over. Let's see if we could roll back up here. On the 22-hour time frame, the stochastics shot up today. We got all the way back up close to 78K after we were down to 75K, which is pretty bullish, and now we're holding at 76K. The good thing is we never broke below 74K, which is a major support level. We did break 76, but now we're currently above it, and we got back up pretty fast. So us losing 76K wasn't too much of a big deal as long as we could stay above it now. Now the big resistance is going to be breaking above 78K. This 21 moving average on the 22-hour chart is at 77,758. We have to get above this in order to remain bullish. If not, we could lose this 100 moving average again and fall down to this 200 moving average at $72,702. We head over to the 8-hour chart. The stochastics look nice here. Looks like we still have room to continue going up. We got a tweezer bottom right off this 200 moving average. We got rejected off the 21, but we still have room to continue running up. This looks bullish. This looks like we could continue to go up here. See if we can make it up to this cluster of moving averages, at least to this 50 moving average at 78,795. I was thinking we could make it back up to 79K at least before we roll over again. It's been tough though. Now on the 4-hour time frame, the stochastics still look like we have room here before we roll over. I was hoping that this could have been an inverted head and shoulder. I told you guys this in the last episode, left shoulder, head. I was thinking this would be the right shoulder, but look, we rolled over now. Now I'm thinking maybe this could turn more into a complex inverted head and shoulder, whereas left shoulder, maybe this is the head, and we play around here for a couple of days. Monday's going to be a holiday. Maybe this kind of being a complex right shoulder, and then we pop up. Let's see if that ends up working out. But we got rejected off of this 50 moving average. We're still below the 21 moving average. It's imperative we get above this 21 moving average, and we really need to get above this 200 moving average at 78,522. Rejection from this 200 moving average, I think we're going to get more downside. On the 1-hour time frame, stochastics here are toppy, but it looks like we're about to roll up. I don't like these tweezer tops. We rolled over. We're kind of bear flagging out a little bit here. This could drop us back down to this 21 moving average at $75,608. Now, I like the fact that we were able to make it up all the way to like 77,400, but we immediately came back down. We're holding 76. Let's see if we have the strength to continue holding and going up. And then on the 15-minute time frame, the stochastics are low. It looks like we could roll over, but we are holding above the 21 and the 200 moving average. So we're kind of like flagging out here a little bit. This could give us a move back up. I would love it for us to get back above 77K, but ultimately we need to get back above 78K and even 79K if we want to remain bullish. Ultimately, we do need to get back above 80K. We can't get above 80K, then this is just going sideways and we're hovering until possibly dropping back down. Now, if we do fall back down, like I said, we need to try to hold above 74K. We lose 74K, then I see 70K as our next level, 72, 70K, possibly even lower. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.